Let me make something very clear from the start. Calling Bitcoin a risk-on asset is like calling a tank a race car just because it moves on wheels. It's lazy and it's surface level. And it tells me one thing: you haven't done the work. Bitcoin isn't some speculative tech stock. It's not a Fed-driven plaything. This is a monetary revolution, and only a handful of people actually understand that. Most people talking about Bitcoin on CNBC or sitting on corporate treasury boards have no clue what they're dealing with. And that's exactly why most of them will lose everything that they put into it. Let me break this down a little bit. What do people mean by risk on? A risk on asset is something investors rush into when they feel good, like when the interest rates are low, when central banks are printing, when the risk appetite is high. Examples of this are tech stocks, growth equities, meme stocks. These things explode when liquidity is cheap, and they collapse the moment that mood shifts. They're just built on hype, no fundamentals. Narratives, not scarcity. Liquidity, not conviction. When people say Bitcoin is risk on, what they're really saying is, I only look at short-term price correlations and I don't understand what this thing is actually for. Let's be fair though. Some of this confusion comes from data. In 2020 and 2021, Bitcoin did seem to move with tech stocks. When the Nasdaq soared, so did Bitcoin. When the market sold off in early 22, Bitcoin followed. So people assumed, it's just another high volatility tech play. Probably trades like Tesla. Wrong. What really happened was far more simple. Bitcoin was being discovered. Liquidity flooded into all markets, and Bitcoin, being a global asset with 24/7 trading, became part of that macro soup. But price correlation isn't the same as asset identity. Your umbrella might always come out when it rains. Doesn't mean it causes the weather. Bitcoin isn't a stock. It doesn't represent any company. There is no CEO, no quarterly report, no earnings. Bitcoin is rules without rulers. It's a thermodynamic fortress of time-stamped truth. It's the first asset in history that combined digital portability with absolute scarcity. This is not a tech play. It's a breakaway monetary system. It doesn't care if Powell raises rates or cuts them. It doesn't care what Goldman Sachs thinks. It doesn't even care what you think. It's a system built for adversaries. It survives because it has to. It is money that exists without trust, without permission, and without borders. And you think that's a risk-on asset? Please. Bitcoin doesn't fit into the legacy world. You can't inflate it. You can't censor it. You can't rehypothecate it 50 times like gold. That's why institutions love to box it into their familiar language. Oh, it's digital gold. Oh, it's a non-correlated alternative asset. Oh, it's like a tech stock. No. Bitcoin threatens the very foundation of their entire game. It's an exit door from the fiat system, a system that they benefit from through inflation, bailouts, and the money printer. So what do? They mislabel it, minimize it, misunderstand it. It's textbook behavior from a system facing disruption. Remember when companies started putting Bitcoin on their balance sheets? Everyone got excited. Institutional adoption. I wasn't impressed. Because here's the truth. Most corporate treasuries are run by people who have no clue what Bitcoin actually is. They bought it because it looked cool on an earnings call. They bought it for diversification. They read a MicroStrategy article and thought, hey, maybe we should try this too. But they didn't do the homework. They didn't learn about nodes. They didn't learn about private keys. They didn't set up proper cold storage. They still trust BlackRock and Fidelity to hold it for them. You think these people are going to hold through a 60% drawdown? Through regulatory FUD? Through internal pressure from the board of shareholders? Not a chance. They will fold faster than Silicon Valley Bank. This is why I say most of these treasuries will go to zero. Most Bitcoin held by companies and funds will either be sold or lost because the people managing it are just tourists. They don't understand why Bitcoin matters, how to secure it, and what it means to actually own it. They'll panic sell on a headline, or they'll mismanage custody, or they'll delegate it to a custodian that gets hacked, frozen, or corrupted. There's no point to sugarcoat this. Weak hands are definitely going to zero, and they deserve it because they never understood what they were holding in the first place. And this is actually very good news. This is how Bitcoin works. It rewards knowledge. It punishes ignorance. When tourists leave, coins move to stronger hands. Every panic sell strengthens the network because the people who stay, the ones who run their own nodes, hold their own keys, study the protocol, those are the ones who shape Bitcoin's future. Self-custody isn't optional. It's the entire point. This isn't a buy and forget asset. It's a sovereignty tool, and it demands responsibility. Most cannot handle that, which is why they will fail. Bitcoin really doesn't care who buys it. It doesn't care who sells it. It doesn't care about your opinions, your charts, your macro takes. It just keeps running. Block by block, tick-tock, next block. So when someone tells you Bitcoin is a risk-on asset, just smile. They're telling on themselves. The future of Bitcoin won't be shaped by them, absolutely not. It will be shaped by those who understand what it really is and who aren't afraid to hold it through the storm. Let the fools sell. We're not going anywhere, not even close.